Hello viewers, we'll be going over gold miners, ETF ticker symbol GDX. In this video, we'll be going over the day-by-day probability model, the technical performance of each model, how we find the models, comparing the current trend with the trend in the past, and we'll go over the day-by-day forecast for GDX. So back to the technical analysis, we're currently up 2.6% on the 1-hour chart. We were at oversold RSI on Monday. We saw a reversal on the 1-hour MACD. It's starting to converge up, and we were quite near the 200 moving average. If we expand out further onto the 4-hour chart, what we have here, we are resting on a 50 moving average support, this yellow line. We may encounter temporary resistance if we close above the 9 moving average, and the next resistance will be the 18 moving average. And at the moment on the daily chart, what we have here, we see a slight divergence on the daily MACD. We were oversold on the RSI back in July 8th. And if we zoom in a bit closer, we may see a trading range with these lower and upper bands, and these bands are based on the day-by-day probability model right here, up 9.6% and down 9.6%. So that is the trading range for the next coming days. And the upper band is roughly around a price of $40.69, and to the downside, the bottom band is $34.59. And the bottom band coincides with past resistance that dated back to June 11th, and since we're above resistance, that will act as our support if we lose support at the 18-day moving average. And we may even see possible lower lows. So again, the next possible support will be around $34.40. So now let's head to the day-by-day probability model. As we progress to the 5th day, that will be a week of trading. We have a 17% chance for GDX to climb between 0 to 9.6%, and to the downside, we have a 17% chance for GDX to fall between 0 to negative 9.6%. And on the extreme case to the downside, we have a 67% chance for it to fall between negative 9.6% to negative 19%. So let's examine the day-by-day forecast for GDX. As we progress to the first day, that will be a Wednesday, and 2 days out will be Thursday, and so on. So we have 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. Which one of these models we should focus on? Ideally, the model that is best matched to the current trend. The blue lines are current trend, and overlapping it happens to be the best match. And right here we have our current trend, and below is the trend that we found on the line graph above. This trend dates back to December 18, 2007 to March 17, 2008. So let's begin comparing both of the trends. What we have here on the past trend, we have 1, 2, 3 points, and we also have 1, 2, 3 points on the current trend. So there's reason to believe that the trends and patterns are somewhat the same. The outcome and forecast should be fairly the same. So the model that we just examined was December 18, 2007 to March 17, 2008. Back then, GDX was down roughly around, say, 11.3%. So if we examine back to the day-by-day probability model, that coincides with this standard deviation. 67% chance for it to fall between negative 9.6 to negative 19%. If we examine closer on the technical performance of each trend, on the current trend, we're down 5% from monthly high, up 19% from monthly low, down 41 basis points from 10 simple moving average, up 4% from 20-day simple moving average, and up 6.5% from 50-day simple moving average. Compare that to the trend that we just found. The only technical difference is the 10 simple moving average. Back then it was up 1.5%. Compare that to the current trend, which is down 4.1%, or 41 basis points. So do keep that in consideration. There are some technical difference among the two trends. And again, these models are available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.